Hello and welcome to the look ahead for Wednesday the 23rd of July with me, Fiona Sincotta, Senior Market Analyst at City Index. So the economic calendar is relatively quiet tomorrow. However, the focus is going to be on US earnings season with both Tesla and Alphabet reporting after the close tomorrow. So these are the first two of the Magnificent Seven who will be updating the market. Now, this is Tesla that we're looking at here. Tesla is going to be updating the market, as I said, after the close. We know that Q2 earnings, deliveries disappointed with analysts really been cutting their quarterly profit expectations for the stock. Now, Tesla's facing plenty of headwinds as we go into the earnings. We've seen a 13% drop in Q2 deliveries, as I mentioned. We've also got intensifying competition. We've also got the brand that has been tarnished after CEO Elon Musk's foray into politics on both sides of the Atlantic in the US and in Europe. And then we've also got Trump's decision to cut the regulatory credits for Tesla as well. So a lot tail of headwinds to be impacting this stock. But on a positive note, we have seen the start, or at least a limited start, of the robo-taxi ride hailing service, which longer term is potentially going to be a game changer for Tesla. Now, EPS is expected to fall 25% to 0.3, so 39 cents a share. Revenue expected to fall 13% to 22.19 billion. And also, we're going to see a lot of focus on commentary regarding that still yet unseen affordable vehicle that we're waiting for, as well as delivery guidance for the coming quarter and the rest of the year. So this is the share price what we're looking at here, trading within this symmetrical triangle pattern, picked up from the lows that we saw around that 290 up above the 200 SMA, and it's just again found resistance on that falling trend line, resistance at around the 340 339 level. So I mean, buyers, if we're getting sort of an optimistic outlook, then we're going to be looking towards the 350 on the upside to confirm that breakout from the symmetrical triangle pattern. On the downside, if we get disappointing numbers, 200 SMAs in there at 318. We've got the support from the rising trend line at 306, and a break below 290 will confirm that breakout from the pattern to the downside. Then we've also got Alphabet. So Google parent Alphabet will also be reporting. Sorry, there we go. Reporting tomorrow after the close as well. And this is as we've finally seen actually some life come into the Alphabet share price, seen a solid recovery actually from that April lows. But the focus here is going to be very much on AI versus anti-regulatory or antitrust measures. So, I mean, AI is a little bit of a double-edged sword as far as Alphabet is concerned. It obviously drives growth for Google Cloud, which is a massive revenue driver for Alphabet, expected to see growth of around 26% in that Google Cloud revenue. And also we've got the sort of heavy development that we've seen of the Genie AI assistant amid sort of the ongoing interest in sort of how to monetize AI. That's going to be very much focused. But on the other hand, there is this growing concern also that AI could really hurt demand for Google's search engine. So that's where we're going to be seeing this way up. But I think overall AI is expected to be considered a positive for the share price, as long as that overshadows the antitrust regulatory concerns that Google could potentially be broken up. As far as what to expect as EPS, we're looking at $2.18, and that's on revenue of 80 billion. That's supposed to be up 15% and 12% respectively. And that sort of clip of growth is expected to continue out to around 2028. So guidance will be very much in focus as well. Just as I mentioned, it's very much going to be a tech focus. So let's just take a look at the NASDAQ 100 trading just off all-time highs that were reached yesterday. We've seen this sort of grinding higher above that 23,000 level. There are a couple of factors here. Obviously, optimism surrounding earnings season, which has kicked off slightly better than expected. Also, the market has become a little bit desensitized to the Trump tariff saga, but as we loom towards or move towards that August 1st deadline, we might find that sentiment struggles a little bit. And then we've also got the weaker US dollar, which is beneficial for US equities, and expectations that the Federal Reserve will be cutting rates again soon, potentially in the September meeting. So just as far as levels to be watching, we're testing that 23,000 level support at the moment. Below here, looking at around 22,750. That's the 20 SMA and the rising trend line support that we've got dating back to mid-May. It would actually take a break below the 21,500 level to create a lower low, changing the structure of the chart. Bull's going to be looking for a rise above the current record high, which is 23,260, to bring the 23,500 level sort of into focus. As I said, blue skies above, but that would be the next logical level to be watching for. So I hope you've liked today's analysis. If you have, then please do give this video a like, and for more videos like it, then please do subscribe.